Welcome to This Explainer. Today, we're diving into the strategies of an asset manager so unbelievably massive that if it were its own country, it'd literally have the third largest GDP on the planet. We're talking about BlackRock. If you've ever found yourself wondering how the true titans of Wall Street navigate today's financial landscape, well, you're absolutely in the right place. We're going to cut right through the daily market noise and look directly at the structural data of modern portfolio's. The goal here isn't just to see what the biggest financial institutions are doing, but to really grasp the underlying philosophy behind their massive moves. So, to uncover their playbook, we really have to start by asking, how do the world's largest asset managers truly think about wealth? Spoiler alert, it is definitely not about next Friday's stock price. It's about mapping out decade-long shifts in the global economy. Which naturally brings us to the elephant in the room. Why do technology and artificial intelligence completely dominate modern institutional portfolios? Like, why is the absolute smartest money on Wall Street anchoring its wealth to this one specific sector right now? And really, what separates everyday investing from the literal trillions of dollars constantly moving around Wall Street? Simply put, it comes down to emotional discipline versus reactionary panic. But more importantly for us, how can an ordinary investor realistically replicate this institutional success? Because believe it or not, you don't need billions of dollars or fancy Manhattan skyscraper to adopt their exact framework. Ultimately, we want to know, what is the absolute secret to building long-term wealth intelligently over time? Well, let's just tune out the noise, look straight at the data, and find out together. Okay, to truly understand modern wealth, we first have to look at BlackRock and their totally unparalleled influence on global markets. Thinking like an asset giant means zooming way out and taking the macro view. Ignoring the day-to-day turbulence and spotting the deep underlying currents of the economy. BlackRock doesn't just ride economic waves. Because of their sheer size, their investment decisions essentially validate and even accelerate these massive macroeconomic trends. BlackRock is the undisputed #1 asset manager globally. They manage roughly $10 trillion. To put that into perspective, that volume is so staggering, it leaves a crystal clear blueprint for us to analyze. When the single biggest player in the game shifts its weight, it gives us the ultimate case study in institutional thinking. So, let's peek inside BlackRock's portfolio and decode their heaviest holdings. When you strip away the thousands of smaller investments, a distinct, incredibly modern narrative starts to emerge. They aren't just evenly spread out across the old industrial economy. Not at all. They are deeply, intentionally concentrated in the exact companies designing the future. Just look at the deliberate structure here. We're seeing these massive, balanced 25% slices across the board. You've got 25% in AI hardware, anchored by heavyweights like NVIDIA. Another 25% sitting in cloud giants like Microsoft and Amazon, the ones holding practically all the world's data. Next up, 25% in consumer tech, primarily Apple, controlling the very devices in our hands. And finally, 25% in digital ads, dominated by Alphabet and Meta. This isn't just random speculation, guys. This is the structural ownership of the modern digital world. And this heavy tech concentration points to a massive economic shift. We have definitively entered the AI era. But here's the thing. Institutions don't view artificial intelligence just as some fun new software category. They view it as the new digital infrastructure. Think about it. Just like railroads, highways, and electrical grids were the absolute critical infrastructure of the past, AI and cloud computing form the backbone of the entire future economy. The whole evolution of institutional focus over the last few decades is honestly pretty fascinating. Notice the steady progression here. We moved from traditional assets back in the 2000s, shifted significantly in the 2010s toward the massive rise of cloud computing, and now we've landed squarely on the absolute dominance of digital infrastructure and AI. Asset managers saw early on that data and computation were going to become the world's most valuable commodities, and they confidently allocated their capital way before the rest of the market even caught on. So the absolutely crucial takeaway here is this concept of true ownership. It's about holding permanent stakes in that foundational infrastructure we were just talking about. It is not about frantically jumping in and out of stock positions, trying to capture a few quick points of profit. No, it's about recognizing that the modern economy runs on these digital rails and holding a piece of the companies that actually own those rails. That is how deep generational wealth is established. All right, let's pivot away from the literal trillions of dollars on Wall Street and look at what ordinary investors, like us, can realistically learn from this institutional behavior. Think of this as your micro playbook. It's all about translating that cinematic, global scale investing approach into practical, grounded steps for your own wealth creation journey. Because again, you really don't need a Bloomberg terminal sitting on your desk to apply these core tenets of modern finance. The very first step in your playbook, tuning out the noise. It is absolutely vital to separate the wildly exaggerated predictions of crypto influencers and fake gurus from the calm, authoritative strategy of actual wealth managers. I mean, we are constantly bombarded by get-rich-quick messaging online, right? But look at what the biggest institutions actually do. Intelligent, long-term asset management. They're calm, completely unbothered by the toxic hype cycle of the internet, and entirely focused on cold, hard economic realities. So, your realistic playbook requires three main things. Number one, intelligent asset allocation. You need to identify the dominant macro trends like digital infrastructure and position your capital right there. Number two, strategic diversification. Don't bet the farm on one single AI stock. Spread it out thoughtfully across the hardware, cloud, and consumer sectors. And number three, maybe the most important, extreme patience. You just got to be willing to hold these structural positions confidently, even when the short-term market goes into panic mode. If you want to continue building your wealth intelligently over time with modern financial insights just like this, make sure you hit subscribe to WealthOS. Our whole goal here is to consistently bring you this level of premium, realistic education. We want to help you filter out all that noise so you can focus on what actually drives true asset growth over the long run. I'll leave you with this final, somewhat provocative thought. Will you adopt the intelligent patience of an institutional giant, or are you going to let the AI economy pass you by? The blueprint for the future of wealth has quite literally already been written by the largest players in the world. It doesn't require hype, just discipline and a bit of foresight. The choice of how you manage your own capital in this incredibly exciting new era is entirely up to you. Thanks so much for joining me